One of the biggest challenges business owners face during the growth phase is repeating the same financial mistakes that quietly hold them back. Common mistakes include poor cash flow forecasting, inconsistent job costing, mixing up COGS and operating expenses, and failing to track work in process on long projects. These errors lead to surprise cash shortages, inaccurate profit reporting, and difficulty securing financing when you need it most. For example, many owners focus only on revenue growth while ignoring how quickly accounts receivable can tie up their cash. A single large client paying 60 or 90 days late can create a cash crisis even when the P&L looks healthy. Another frequent mistake is treating all expenses the same instead of properly classifying direct job costs. This distorts your gross margin and makes it hard to know which types of work are actually worth pursuing. The good news is these mistakes are preventable. By implementing the right systems early in the growth phase, you can avoid painful surprises and build a stronger foundation for scaling. In this video, we walk through the 5 most common financial mistakes we see in growing businesses, and more importantly, how to fix them before they become expensive problems. If this was helpful, I'd appreciate you subscribing so you don't miss future videos. Feel free to leave any questions in the comments below, or head over to risingtideaccounting.com to book a free CFO consult where we can talk through your specific situation.